Okay, everybody, it is me, Gregory Mannarino. I can't believe it. I made it earlier. I said that I didn't think I was going to be able to get a video out right now, but I was able to twist things around a little bit. So here I am, and I'm happy to be here. I have a lot to talk to you about. Going to blow your mind what you're going to hear here right now. Let's start off with this. So, yes, lovely. Post-market wrap-up, Friday, September 9th, 2022. I want to start off with, let's start off with this. Easy money, or the promise of it, or the potential of it, is a beautiful thing for the stock market. Not for everybody else, but for the stock market, for the wealth transfer effect that's been going on, it couldn't be better. The prospect here that the European Central Bank is going to reliquefy the banks, I talked about this earlier today, and the Fed will follow suit, sparked a nice rally on Wall Street. Imagine my surprise here. It's not going to stop. The easy money, the inflating of the global debt bubble, the destruction, the wealth destruction of the middle class is in full swing. Let's talk about that. So this is Reuters. You ready? This is the headline. U.S. household wealth fell by a record $6.1 trillion in the second quarter. This is an all-time record. Middle class going away. Extinct. Evaporated. Eliminated here. Massive wealth transfer effect going on right now. And I am more than certain that you can feel it. And let me explain this to you. It's not over. What we did here today, I'm going to prove this to you. So we just found out again, U.S. household wealth falls its largest amount ever in history, 6.1 trillion in the second quarter. Now, Janet Yellen, this is what she had the nerve to say today. The thing, the it, the troll, the creature. Janet Yellen, White House policies rescued the economy. So let's put that into perspective, because you know how I always tell you can't make this up. So explain this to me. I want you to take this in. Take a minute to think about what I'm going to say. All right, you ready? Here we go. So we just found out that U.S. household wealth, I'm laughing, fell a staggering record, $6.1 trillion in the second quarter. Okay, lovely. But Janet Yellen wants you to believe that the White House, President Mummy Man, okay, his policies have rescued the economy. She's the same one as well who's trying to sell you the lie that we are not in a recession. She might actually be correct. We are way, way, way worse off than a recession. We are in a full-blown depression in my view here. If you don't believe that household wealth falling is largest ever in history, $6.1 trillion, isn't a depression? Well, I don't know what is. Okay. Yeah, but the stock market's doing great. Doing great. And this promise of easy money by the European Central Bank that's going to get followed up by the Federal Reserve, who knows? New record highs are probably coming. The 10-year yield, 3.31. Now remember, it's not so much the number. If you notice what happened today, we started today at 3.25. So we actually went a little higher here on that 10-year yield. But the dollar on the news of possible backdoor bailouts, front door bailouts for the major banks, well, that was enough to push the dollar lower and made the market happy, as you can well see. It's an incredible situation here. Now, we got an interesting warning today from someone or an entity here that doesn't warn too often. So this is Charles Schwab. They're talking about, are you ready for this? They're warning of a credit market event. They're not outlining what this event is, but they're talking about stability in the credit market. Now, does that sound familiar to you? I think it does. If you've been following this blog, nobody knows more about the instability that we've been seeing here in the debt market. In my view, look, and I really could be wrong here. I really could be wrong. In my opinion, especially gauging from what we heard out of the European Central Bank today, all right, that they're going to be potentially could be reliquefying the banks. In other words, pumping them full of cash. Same thing here in the United States. The Federal Reserve will follow along with the ECB. It always does, the European Central Bank. That tells me this is the first step in trying to stabilize this instability that we're seeing in the financial markets. Now, in my opinion, again, what Charles Schwab is talking about, a credit market event, is an eventual meltdown in the credit market. Now, what I think is going on here with Charles Schwab's warning here is they're saying if instability in the debt market continues, well, the Feds and the ECB, of course, are going to get in here and do more. I mean, that's been my take for a long time now. Most of you, not all, and you're entitled to your own opinion on this, but most of you seem to believe that is what's going to happen. In other words, that the Fed and the ECB is going to get in here and stabilize the credit market. So it's interesting how they word these things, a credit market event. Okay, credit market event, like what? It's too much in my view. So anyway, let's go back to this market. So nice little rally today. 10-year yield did gain, dollar did sell off. There is that mechanism here, and I've been telling you this for years. There is a compensatory mechanism here. The 10-year yield can stay where it is if the dollar continues to weaken. If we see, for example, yet again, 10-year yield rising, bond yields rising around the world, what does that mean? Debt is selling off. If we see that, along with a strengthening dollar, relative strength, looking at the Dixie, DXY, market's going to hate that. And this is exactly what Charles Schwab, in my view, is talking about, this credit market event or instability. A sell-off here in a market that is already liquid is a big, big problem, and it could potentially wipe the stock market out. And I mean wipe it out. And what would that do? I mean, what did we just find out? U.S. household wealth fell $6.1 trillion in the second quarter. So, a lot of people do own, a 401k plan, some kind of investment plan that is associated with the stock market only going up. Okay, and that would finish the rest of it too. So you want to talk about another X amount of $1 trillion, loss in net worth. Okay, well, that's going to happen anyway. That's the system. The system is designed to do this. It's honestly, that's the truth here. It's some kind of a twisted wealth transfer mechanism that just robs the middle class blind, supports the corporate agenda, which is absolutely being fulfilled, at the expense of U.S. small businesses, which are being exterminated here in Las Vegas, where I live. Okay, there's closures everywhere. Restaurants, stores, mom and pop establishments, they're all going under. Meanwhile, corporations, they're doing fantastic. This is the corporate agenda. This merger between whatever we got now, this new government entity and corporations kind of melding together, that's what we have. And that is all part of the destruction of the middle class here. They don't want you to own your own business. They want you to be working for someone else as a slave, create slaves in any way they can, debt slaves, slaves to the system, people who are more dependent on the system. Because again, if they can get more people dependent on the system, the more people will back it up. And they have very, very successfully done this, and I don't think we've seen a damn thing yet. Gold and silver today putting on a gain. Bitcoin still doing good here, over 21,000. Crude oil putting on a very big gain, almost 4%. Last time I looked, 3.8 something percent. That's the story. That's where we stand. Now I just want to touch on something. So, as I always explain to you, you can't make this stuff up. Do you believe, like Janet Yellen, this statement here, the White House policies have rescued the economy? This is what she's telling you is our economy is fantastic. It's booming. But let me ask you, why is it that she didn't address the fact that U.S. household wealth is literally evaporating? People are suffering. No, the White House, President Mummy Man, Bidenstein, he saved the economy. Do you think that's true? I don't think you do. I don't think you do. And what do you think about this warning from Schwab here about a credit market event? You know, who knows? Maybe there's people watching my videos because I don't know who else is talking about this out here. Maybe there is. Like, I don't follow anybody. So all of you out here who follow my work, maybe you follow other people too. Who else is talking about it? This instability in the debt market, the credit market, which is the driver of all of this. I don't know. I really don't know, but maybe you can help me out. All right, people, look. With that said, I covered a lot with you today. I really, really did. And I'm happy to be here. Like I said, I rushed like crazy to try to be here to finish this. And I'm glad I did. Some pretty epic things that are going on here. It's unbelievable. Easy money. And it's not going to stop. If the easy money is not going to stop, what does that tell you? You're going to see a stock market rise at the expense of the middle class. Is going to be sucked dry. You're going to see inflation globally continue to rise, and you're going to hear more stories about, oh, it's peaking. You remember that narrative for the third time just a few weeks ago, we were peaking. But as it turns out, according to the Federal Reserve's own beige book that came out this week, we're not peaking. And in no way, shape, or form is inflation peaking. And with the promise of more easy money, sure, stock market's going to love that. But inflation is going to surge out of control, way worse than we have right now, just like it's meant to do. Just like it's meant to do. You're under attack, people. I told you. You remember the middle class? You have a tattoo on your face in the shape of a target, and you can't get it off. The pressure on you is going to be even greater. All right, look, this guy here loves you a lot, and I mean that from the heart. Please, people, have a great weekend. You're going to see me Sunday from my markets, a look ahead. But enjoy the rest of your day here. Enjoy your day tomorrow. But ponder these things. What does it mean for you? You should be betting against the debt, becoming your own central bank. Let them play their games with gold and silver. Let them do what they want to. In the long run, I can't imagine a better hedge against the hyper bubble in debt, which is going to get even way more hyper than it is already. Should be obvious. All right, I'm out of here. See you Sunday.